Good morning and welcome to another Jackrabbit Club video update. My name is Steve, and in this video we're going to take a look at the current portfolio that we are trading here. I am trading it live. I don't know if you guys are trading paper or any of these trades, but this video is really intended to show you exactly how I go ahead and manage each and every trade that I make in my long-term accounts. We're looking at a 3-year weekly chart here just to be a little bit closer to the action. And with this market, especially the roller coaster week that we had, this really reinforces to me, at least, the importance of having a process and really is trying to stay out of that daily time frame. All right, the daily time frame to me, if we look at some of these charts and I'll show you a quick example. I think it was in MSI. Let's head on over. All right, so here's what MSI looks like on the weekly chart. And this is one that we talked about last week. And, not for anything, it probably looks pretty sloppy on the weekly chart anyway. But you could see that it has these, move up, pull back to trend line, move up, pull back to trend line, move up, consolidate, break out. All right, so it's pretty easy to follow. You flip on over to the daily chart, and to me, this looks like a mess. It looks like one of those pictures that they show you when they want to know what you're thinking, like for the mentally disturbed movies where it's like, an ink blot, and they tell you it looks like an apple doing something or whatever. To me, the daily chart is just way too crazy. And I think it can turn you around, where it really gets you away from, at least from my perspective, really gets you away from what is really happening. The overall trend is higher in MSI. Stay long it. In here, now we broke down below the high. We're coming back in. We're down below the trend line. It just gets a little crazy. So especially weeks like this, it really reinforces the idea of having the weekly charts. I also want to take and touch on at the end of the video, anyone who is confused or looking for that bread and butter setup that I talk about in the 4th issue of the Jackrabbit Report. I really kind of framed it out that you have to find a setup that you love to go to. It's your go-to setup. It's your bread and butter. And mine are weekly breakouts. All right, that's just what I like to trade. It just makes it very easy for me. You can also trade weekly pullbacks. And I'm going to show you, we're actually going to add a trade that I'm considering to be a weekly pullback. And that's going to be in JPM. And we'll do that at the end of this video. All right, so let's just take a quick run through on the portfolio. Let's get back over to the right screen. All right, BBY. So remember last week I was telling you I was looking for a break higher, all right? And finally, amazingly, with tech being down this week, BBY is moving higher, all right? So what are we going to do? Well, we're going to make it very simple. We're going to take and move our stop to this swing low. Just like we did in Netflix last week, we're going to take the opportunity, move it the stop up, reduce risk. If we come back and break this level, I'm going to be out of the trade. All right, it's that simple. To me, it should consistently be making higher highs and higher lows. I am now considering this a low because we've broken above the previous candle's high. All right, and we'll zoom in a little bit further. So the previous candle's high was at 56. Let's just call it 56. All right, we finally broke above that. And now this, to me, is a classic reversal pattern that maybe we're going to start going up. All right, if we continue and break down below this 54.50 area, well, then this actually is not a low. All right, or now we have potentially a lower high, and then in that case, I just want to be out of the trade. I don't want to be involved. And the other thing I want to point out to you is if you actually connect this low with this low, all right, that maybe we're starting to develop an accelerated trend different from what we had. So we're going to move that stop up from 50 to 54.63, and you can see this will be the 3rd time I've moved the stop. It went from 42.40, 50.34, and now 54.63. If you want to add to an existing position, I typically like to add on a new breakout. All right, the only time I really like to add is when I get my signal. All right, my signal being a weekly breakout. I'm not getting a weekly breakout here. I'm just getting a pullback. So I'm not looking to add to that position at this time. DGX, all right, again, continues to just motor higher. All right, I'm going to also move the stop up in this to the low right here at 106.50. That was not. All right, and you can see that we are now breaking out again from a higher consolidation. Now again, this is an opportunity that I would add to this position, okay? Using 106.50 as the stop. With that said, you also have to kind of take into account current market conditions. All right, I'm going to be putting risk on the table with JPM in a little bit. We're going to go over that. So I'm not really looking to add more risk. It is healthcare. Healthcare, as you know from the previous video, very strong recently. But I also feel that this is very extended and maybe needs to kind of pull back a little bit more, consolidate a little bit more. I'm not looking to tie up money, more money in the stock. That's number one. Number two is when I'm looking at this, I have 40 shares right now. I went into my position calculator. I can only add 12 more shares. So to pay the commission to add 12 more shares, you know, yes, it's $1,000, but with all those in play, I'm not going to add to DGX. I'm just going to let it run. FedEx. All right, what can I say about FedEx? Just a huge run off a simple breakout. I'm actually just going to slide my stop up slightly, come up to, let's go to this 187.50 area. Again, not much, but at least it's not at the lows for a complete loss if it were to turn around. And, you know, this is, some of these get really difficult. You know, this can continue to do the same thing where we constantly make new lower highs and it just continues to go. And in that case, then what I would eventually do is start trailing to the previous low. If that low got taken out, I would take half my position off, look for a bigger pullback to a support level or to a trend line, and then you know, continue trailing as I normally would. But for right now, FedEx looking great out of the gate there. GLW, concerned here with maybe a bit of a topping candle. All right, so you know, just a concern. Can't do anything about it. Not going to change my process. Right now, stop 28.34, and you can see it's a double bottom, right? One here, one there. Or not necessarily a double bottom, but two reference points to go off of. So this could very well end up back in the box right around here, 29. Maybe it needs a little bit of a longer time to consolidate, to pull over to this trend line. Maybe this is just the top, all right? But I'm not going to try and predict what's going to happen. I'm just going to react. Right now, I'm concerned, all right? But all in all, things can change in a week. HIG, as I said, financials super strong. And you can see that this was all the way up at 53.30. Closed the week 52.57. I am going to go ahead and trail my stop up to this consolidation. Okay, so if we remove this, you can see that there is a smaller consolidation that is within that larger one. Okay, so here's one, and here's the other. Okay, so we're gonna go ahead, trail that stop up, and every time we trail stops, we're taking some risk off the table. All right, we're now hopefully, unless you know it breaks down and continues going, hopefully now if we get taken out at 48.50, it's not a 100% loss from what I size my position at. Because don't forget, I'm taking whatever the closing price is of this entry candle, 51.50. I'm subtracting whatever my stop price is, 46.74. Let's make the math easy and call it $5. Whatever I'm going to risk, whatever I want to risk, say I want to risk 500 per trade. You know, 500 divided by the difference between the entry and the stop gives me 100 shares. Okay, and I also put in my position calculator, I have it built in that it also takes an additional 1% move off of whatever the stop is, so that it accounts for those continuations through stop, because I am using closing prices. All right, so just because it goes through the stop doesn't mean it can't keep going and keep going. That's just the nature of the game. ICE, again, another financial, another one that continues to move well. I really have nowhere to trail my stop to at this point, so I'm just going to let it run. ITW. All right, we took half off of ITW at the beginning of the week. All right, so we had this trade that went from the 120 or 124.48. We got out at 145.78, pulled in about $600 or 2.88 R on that trade. And now I'm down to a more manageable position, something I'm a little bit more comfortable with, down to about $3,600 in risk, or I should say in market value in this trade. And, you know, it continued lower. Maybe this was the low. We came back to this 141 area, but let's see. All right. Ideally, I get another down week, and then I can get a reversal and then look to trail that stop up. If not, then maybe this 141 area is my next stop. JPM we're going to get to. Netflix. All right, Netflix is a little bit of a concern, similar to Best Buy this week. Netflix had this big down week. Another one, put in a hammer bottom, went ahead and reversed. All right, and now this week has reversed again. So we break down under 147. I'm not even thinking about it. I'm out. All right, I'll look for another setup. I don't care that it's Netflix. I don't care what the name is. I don't care if I lose money. I'm out. That's just the process. You got to stick with the process. Okay, there's no other way to be successful in this business if you're just gonna go out and kind of gunsling and not really follow a specific set of rules. All right. With that said, Starbucks. We're exiting Starbucks. I'm gonna exit Starbucks for a small loss. These are supposed to be circles. I don't know why they're ovals, but so it looks like we got in Starbucks around 60.55, and now we're at 58.31. So account statement, all accounts, Starbucks. Can I do both? There we go. So I am going to lose a whopping $130 on Starbucks. All right, that's the way you keep your losers small and you let your winners run. All right, you just take the signal. I could say, oh well, you know, trend line support is right here. Let's see what happens to get to trend line. You know, and it breaks through trend line. And then, oh well, previous support is right here, 54. Let's see what happens when it gets there. Don't even play that game. Just get out. You can always get back in. Guaranteed, we'll come back to Starbucks in like 2-3 weeks. It'll be come down trend line, pull back up above 58. And then you know what? Then we could look to get back into it on a pullback. So this is the pullback. All right, you could see the pullback started with a bearish engulfing pattern. All right, so we had a nice move up. Then we had this big week where the high and the low were outside of the previous bar. Continued to move down, move down, move down. All right. If we get back down to this trend line, very possible that Starbucks will pull back. All right. Potentially bounce off trend line. And then if we do get that bounce, then we get back in. All right. But if we don't get the bounce, we're out and we're in good shape. All right. So Starbucks, I am going to be getting out of. Let's go over a couple more. Amazon. All right. Similar situation here. I'm going to, because of how weak the market has been in tech, I'm going to trail my stop up to this big wick low. All right, wick low meaning essentially a candle wick. So we had on this candle, again, candlesticks 101. I know we haven't gone over them very much, but what happened on this candle is Amazon opened at 1,007. It moved as high as 1,016 on that week. Then it moved as low as 926 all in 1 week. Okay. And then finally closed at 978. So this was probably earnings. If we flip over to the daily chart, there was probably an earnings. Oh, nope. No earnings. Forget it. So you could see there. And, you know, again, perfect example. I'm glad this actually popped up. Going back to what I talked about when we first started, look at what happened in Amazon. All right, this was a trade. This wasn't an investment. This was a trade because it's on the daily chart. But I got in here. All right, I got out here. Why? Because I saw this reversal candle and this big candle that came back down. Okay, perfectly fine, right? Now what's happened with Amazon? Amazon went all the way to $1,016. Not saying I would have got out at the highs, but from $869 to $1,000, even with just 5 shares, it was like $1,000 win. Now, if you flip over to the weekly chart, here is that same breakout candle that I got in on. There's nothing on this chart that would have made me get out. Okay, the chart, the lows continually made higher lows up until this week. Okay, so if that was the case, I could have got in at 886 and out at 978. $100 per share versus, what was the other one? I'm lost now. There we go. All right, versus getting in at 874 and out at 897. That is what you don't want to do. Okay, but I'm so happy that came up because it was a valid reason to get out. This is what I'm looking at. It's an absolutely valid reason, especially when you're trading to trade for income. It's a valid reason to get out. But when you look at it from a weekly perspective and you take a minute and you zoom out, there's nothing wrong with this chart. All right, so that's a perfect example. I'm glad that came up, just so you can see everybody makes mistakes, right? And it's not necessarily that it's a mistake. It's just that you don't know what's going to happen in the future, and you do everything you possibly can to make the best decision in the moment. All right. AVGO. All right, this is a tough one here because technically there hasn't been another consolidation that has formed to get me out of this trade, or to at least give me the opportunity to move my stop up. So while we are continually moving lower, looking at it, maybe I could, if I really want to fine tune things, I could have been here at 20 or 233 or 234. But you know what? I'm just going to let it run. Okay. Because I'm sized well enough that if it comes down under 211, then I take a loss. Okay. But maybe it comes back and tests 227. We got a reversal. All right. Berkshire B, you can see that we've just added to these positions multiple times. This is a similar situation to what we're going to see in JPM. Had the reversal back up. So right now my stop is still 162.69. If we break out over this 171 area, I'm probably going to trail up to 166, just based on the fact that I have a lot of money in this trade. We're probably close to 7,000 in that trade, and I want to keep those stops fairly tight. DHR really has just continued to go sideways since I've entered. We've been able to move stop up. Again, a breakout probably over this 87, and I can move up to 83.92, or this may very well just come back and stop me out. Microsoft, similar situation. You can see we added, it's hidden, but added a position here, or originally got in the position here, added to it, and every time it's consolidated, moved up, consolidated, moved up. This is starting to look like the 68 area, maybe the next level to trail to. But if I got stopped out at 67, I'll still walk away with a decent profit. RTN, similar situation. Looking like with all these wick lows, maybe that this is going to be the next support area. But I want to see that breakout. All right, I want to see that breakout to trail stop up. We'll see how next week reacts, but I'm hoping we can get that breakout over 163.50, trail that stop up. UNH just been on an absolute tear, similar to DGX. We've trailed. You want to fine tune it. You can move it up to, keep it and activate. We can move it up to this wick low here and just take a little bit more off. And there's really no science. I try and do it, where as if, we're looking at breakouts and consolidations. You could see if you take out that wick, maybe that consolidation is right here, 171.65. Where you have 1, 2, 3, 4 bars and then a breakout. Very possible, but because of the big wick, I'll just leave it there. And last but not least, WIN has just continued to move higher, grinding higher. Don't forget we're trading. This one is a little bit different because we're not necessarily hitting new highs. If we flip over to the 5-year, you can see that it was in this huge downtrend, consolidated, and now moving up. So Let's find a spot to move or stop to that we would feel comfortable with. And just from looking at this, I'm going to go right here. Okay, you see 1, 2, 3, 4, 5 highs right across there. And then you see these 3 or 4 lows. I'm going to do something like that. I'm going to say that's a consolidation. I'm going to move up to there. Okay, consolidation, big breakout. And we'll move that stop up. And just like that, we're basically locking in, you know, again, as long as nothing crazy happens, we're basically locking in a nice big gain there. But that's a good looking position. And last but not least, JPM. This is one that we're going to go ahead and add our position in. As I said in the weekly chart, or in the stocks to watch, it fits the portfolio. So you can see here, again, I know it's a little difficult because we're all broken up, but this account has Berkshire B. And if we switch on over to this, I have HIG, and I'm also now going to add JPM. And I'm going to consider ICE a financial as well. So max of 4 financials is really what we're looking for, or 4 in any trade or any sector. And this could very well be a significant resistance level up here. You could see how we came up to it and pulled back a little bit. But the fact is, I'm going to size this position with a stop all the way down here at 83. It's very possible that I'm in it. I'm going to get paid a 2.19% yield to sit in it. And then I think what's going to happen, and again, I'm not trying to predict, but most likely this is going to happen. All right, where it's going to chop around right under this 92.78 area. As long as financials stay strong, it chops around and then breaks out, allows me to then move my stop up to the, you know, whatever the consolidation low is, and also allows me to go ahead and add to that position. All right, so starting out small, getting it on the sheets, and, you know, go from there. So that's where we're at with the investments, the long-term trades. If you want to flip over, we'll just take a quick look at all the accounts and take that off. And you can see that we're up. You know, we took out off half of our ITW earlier this week, and we're left now with a position that's up 12%. And we also are showing a open P&L of $5,400. All right, so we're up 7.1%. I think the end of last week we were up 8.1%. So we lost 1% this week. But don't forget, we also exited a portion of the ITW, which is going to bring that down. So all in all, I'm very happy with where the portfolio is. You can see our biggest winner right now, United Health, we're up, you know, 25%. DGX, 26%. All right, Win, we're up 22%. Best Buy, so on and so forth. And we have two losers because they're doubled. AVGO and Starbucks. Those are our 2 losers. We're going to get out of Starbucks for a $130 loss, and AVGO, we're down, you know, a whopping $40. So that's how you manage the winners. That's how you take small losses. That's how you let those winners run. Hope you guys enjoyed it. Any questions, let me know. And then, as I said, if there's still confusion about the pullback versus breakout, we'll do that real quick because I did actually forget. And as we said, let's find a pullback. CBS is a pullback. Okay, let's clear this. All right, so this is kind of the idea I'm thinking of for Starbucks, what may eventually happen. But here's your uptrend line. Okay, you had the candles come back and back and back and back, and then they started to reverse. All right, this was your entry bar. This bar right here, you have all these highs that are continually getting lower, 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 lower. Finally, you get a higher high. That's your entry. Okay, your stop then goes under the reversal bar. This being the reversal bar. All right, stop is under there. So you're in at 62. you're out if it goes under, say, 59.50. All right, and that's it. You're in the trade. Okay, that is the setup. This right here. Let's see if I could do this without making it look funny. Nope, can't do it. Nope, definitely can't do it. Ah, there it is. This right here. Forget that last bar. All right, this is your setup right here. All right, if you're a pullback trader, that's your setup. If you're a breakout trader, let's think of one. Let's just go to DGX. All right, if you're a breakout trader, this is your setup. And this is the way I personally like to trade, because it allows me to not feel like I need to get in at the exact right moment, as opposed to a pullback. You have that one chance, and it essentially, how do I say this? You have to be right on your pullback. You have to try and time a bottom. I don't like trying to time a bottom. All right, so that's why I like the breakout, because in the breakout trade, again, forget that last candle, like this. In the breakout trade, I have all this room from 88 down to whatever we were at, 80. All right, I could be wrong, and this stock could come all the way back down, maybe down to 84, then break out again. So it gives me, more of a comfort knowing that I don't have to pick the exact spot to get in. It's more of like a range, all right, as opposed to the pullback where you have to kind of get it at the right spot. And there are pullbacks within uptrends. So like, for argument's sake, this was a breakout, broke out, my stop's all the way down here. So my position size is smaller, right? Essentially, I try and risk whatever it is, $100, say. All right, so my position size from here to here would only risk 100, as opposed to CBS. Let's play this out. If I got in at 62, right, 62 minus, say, let's just say 59.5, $3. No, forgot the 0.5. $3.50. $2.50. All right, $2.50. I should have been able to do that in my head, but it's late and whatever. So say I'm going to risk $100. Divide that by 2.5. That means I got 40 shares. All right, 40 shares times 64. Nope, I'm having a rough time here. 64. So it's like a $2,500 commitment for $100. All right, so if you think about it, say you have a $10,000 portfolio, say you have $100,000, whatever the number is, and you want to risk a max of 10%, so a $10,000 portfolio, and you're at 1%, which is 100. So you're going to risk 100 on every trade, which is 1% of your entire portfolio value. That means you need to put up 2,400. You can have a total of 4 shares or 4 trades on at one time if you trade those. All right, as opposed to me, it keeps my position size a little bit smaller, and it allows me to put more trades on because I don't know which ones are going to be right. The way I trade is I love to put on trades, as many as I possibly can, barring the money I have, because I don't know which ones are going to be winners, but I feel like I can manage the losers. Okay, and when you get to that point, it makes trading a lot easier because you're not necessarily picking and choosing between multiple setups, and just stick with one. If you're a pullback trader, so be it. Trade the pullback. If you're just starting out, paper trade both. You can make $1 million account in paper money. Trade them all. Trade them, oversize them. Risk 5, 6, 7 times the amount of money you really should. But just trade them. The other thing, while we're on it, there was a couple financials that were in the mix this week, and I just want to go over why I picked JPM over BAC, and the reason is the yield. Okay, that's the only reason. JPM, a little bit of a higher price stock, better yield while it is hitting some support. This one, again, very similar pattern. That resistance would be up here at 25, but from a trading perspective and from a long-term perspective, I honestly, I just went with the yield. It doesn't have to be any more complicated than that. And I am putting BAC on in my trading account using options. So that's kind of the way I cover myself from feeling like I missed out on a trade. Anyway, we're done at this point. That was way longer than I thought. If you're still here and you got that explanation, give me a thumbs up on the bottom, leave a comment, and if you need any further clarification, let me know. Again, thanks for tuning in, and we'll see you next time.